Stocks on Wall Street saw their biggest gains in over a year after the U.S. Federal Reserve said it would keep its near-zero interest rate steady until next year. For more, we turn to Paul Lee at the News Center. Paul, the Fed gave an upbeat assessment of the U.S. economy, and the market seems to like that.
Well, investors have certainly welcomed the news as major market indices rallied on Wednesday, easily reversing the last 3 days of steady losses. The U.S. Central Bank has shifted its stance on the key rate, with Fed Chair Janet Yellen saying the new guideline will take what she described as a more patient approach. Our Sung Ji-sun has the story.
The Federal Reserve confirmed it plans to raise its key interest rate sometime next year. At the end of a 2-day monetary policy meeting, the U.S. Central Bank said it will be patient when it comes to making a decision on when to increase the rate, a change in wording from keeping the rate for a considerable period. While the phrase hints more flexibility in its timing, Fed Chair Janet Yellen said the new guidance is consistent with its previous direction. The Fed said while the U.S. economy was expanding at a moderate rate, its pace of recovery is much faster than that in the Eurozone or Japan, and strong job creation has pushed unemployment down to a 6-year low of 5.6%. Yellen added officials would feel comfortable raising rates as long as other economic signals stay strong and inflation meet its goal of 2%, but it would not take place before the second quarter of next year.
At some point, it will become appropriate to begin reducing policy accommodation. But based on its current outlook, the committee judges that it can be patient in doing so. In particular, the committee considers it unlikely to begin the normalization process for at least the next couple of meetings.
Following the announcement, the dollar rallied broadly against major currencies on Wednesday, and U.S. stock markets were upbeat after 3 days of losses. Despite the sharp drop in oil prices and the collapse of the Russian ruble in recent months, the Fed statement did not touch on the recent global economic turmoil. Asked whether the Russian crisis could harm the U.S. economy, Yellen said the two countries were too loosely linked to expect any appreciable impact, but that they are keeping an eye on the issue. Sung Ji-sun, Arirang News.